on the Chris Smith Show Open House.
Well, spring is just around the corner. We're getting a little bit of a taste of it today, and this usually means more properties come on the market. And people think about selling up and moving on, but the last few years have not been typical at all. It hasn't been the way the market historically performs. Because of COVID and people not travelling, we saw a lot of activity, frenzied activity in the real estate market, and prices went crazy. And then we had the increase in interest rates and the steam came out. So to find out where the market's up to and whether there are places where you can still get yourself a bargain, and are there places that are still going up, Peter O'Malley from Harris Partners Real Estate is in the studio with me right now. Peter, a very good morning to you, sir.
Good morning to you, Chris.
I'm sorry about your reels last night. I can only apologise on behalf of the team. We didn't mean to beat you to 0.
Very impressive, the Rabbits.
Yeah.
They'll be there when it matters at the end of the season.
I hope you're right. Although we've got 3 really tough games. You've got the Roosters, you've got North Queensland, and we think we've got the Panthers.
Might run you into some more form.
Could. All right. Are we expecting an increase in stock come September, the start of spring, given what we've experienced in the last 18 months?
Chris, every spring stock levels will go up. Right. They won't go up to the degree that they normally go off. I think the major message out of the current market is there is a standoff. Generally speaking, sellers don't want to sell and buyers don't want to buy. Accordingly, we've seen a crash in sales volumes. Right. There's a lot of real estate agents around town that have seen an absolute crash in the number of properties they're selling. In terms of prices, Sydney house prices are down 5.3% for the last quarter, and they were down 2.5% in July, according to CoreLogic's numbers. So 2.5% for the month is 30% annualised. So you can see here that vendors don't want to partake and buyers are worried about further price falls, so they're tending to stay on the sidelines.
Now, we were saying off air about properties being pulled from the market when vendors haven't been able to fish around and get the sort of price that they were expecting, and so they've pulled them from the market. That tells me that like in net terms, the market has fallen further than 5%
Indeed it has, Chris. Chris, that's a savvy observation. So the thing that's holding the data up at the moment is the top half of the market is performing stronger than the bottom half. Combined with the point that you've just made, a lot of vendors are not accepting the best market price and are opting to withdraw instead. The market is a lot softer than the numbers are suggesting.
So when the vendors take things off the market, they are thinking about, well, 12 months ago, Jenny, 2 doors up, got $3 million for her house. We should be getting $3 million for ours as well. And they're not being as realistic as they need to be given the changing economic conditions.
Correct. That's one part of it. The other part of it is a lot of people are hoping that the RBA can crush inflation before they crash the property market. Right. And if they can tame inflation, and we saw some promising numbers out of the US this week around inflation. If they can tame inflation, we're hoping for some interest rate relief coming into 2023, which may stabilise the property market. So there's a lot of vendors that are opting to ride the dip, hoping they can get to the other side and some stronger prices in 12 months' time.
What can you tell us about auction clearance rates currently?
They're sub 40% on some weekends. They've been hovering around 40% for the last 2 to 3 months. Right. It's a very, very risky sale process in the current market and an ill-advised sales process unless you've got a highly desirable property or you are fortunate enough to own a top-end property, because that is where the buyer demand still exists. Large family homes at the top end, because people at that end of the market don't seem to be as impacted by the higher interest rates as what buyers at the lower end of the market are.
So if I put my house up for auction against better judgment of Peter O'Malley, and I end up getting a really good price offered to me in the first 2 weeks of the campaign, do I still have to pay for the auction?
Yes, you do.
You do?
Yes.
Right.
So an auctioneer is paid on the booking.
Right, okay. So you don't lose. But the problem is, if you don't take the money that's being offered to you and you think it's good money, you may not have the good money at the auction either.
Oh, indeed. We've seen numerous examples already this year, Chris, where people have received an offer pre-auction, decided to chance their arm at the auction, and it's crashed and burned. So if you do receive a good offer pre-auction, you need to let your real estate agent guide you. It is a case-by-case basis, but in the majority of instances, you're best off taking the good priced offer before auction.
Yeah.
If you do scrutinise in granular detail the auction clearance rate and those successes that we're seeing in the market, Chris, the majority of those are sold prior. So they're credited as an auction sale, but they're actually selling prior to the auction day. So if we're talking sales under the hammer, that's probably only representing about 10, 15% of all transactions in the market at the moment.
That's interesting. Doesn't show up in the statistics. That is really interesting. By the way, if you want to talk with Peter O'Malley, he's here for another 4.5 minutes. He's got time to take your calls if you've got a real estate question for him. Go for your life, 131873. So are there bargains still around there?
I think there's better buying to come, again, which is why buyers are sitting on the sideline. If you're selling one home to buy another, the trade is fairly relative. Last year you would have sold high and you would have bought high. This year you would sell on the way down, but you'll buy on the way down. I think if rents continue to go up and prices continue to pull back, value-based investors will return to the market, which will put a floor under things. Okay. So investors are not spooked by interest rates to the degree that owner-occupiers are, because when you're an owner-occupier, higher interest rates are non-tax deductible. But as we know, for investors, the interest on the mortgage is tax deductible, so they're not as impacted by higher interest rates that owner-occupiers are, and I think you will see a return by investors in the market heading into Christmas.
Okay, that's interesting. Jack, Forestville, Peter O'Malley is listening. Go right ahead.
Yeah, I just heard you say that people pay for the auction regardless. Like if a place says it's for auction, you're saying they do pay for it, or?
Jack, auctioneers, want to be paid on the booking. So what I know that a lot of real estate agents are doing is they're not booking the auctioneer until the Monday before the auction, because they only want to pay for the auctioneer if there's actually an auction. But the reality is, whether you book the auctioneer on day 1 of the campaign or day 25 of the campaign, once you have booked the auctioneer, in the majority of cases, it's non-refundable. And there are, unfortunately for the auctioneers, there's a lot of auctioneers sitting around on Saturdays at the moment with not much to do.
But you're not talking about astronomical prices for this process.
An auctioneer is about $800. I think the bigger consideration, Jack, for someone that comes to market and fails to sell is the advertising campaign, which can range from $5,000 to $10,000 non-refundable. That's the true painful cost in coming to market and not selling. And Chris and I were just talking off air. And if you do want to sell a property in this market, but you're not willing to accept where the market has gone, you're better off not listing at the moment and waiting for better conditions, because we are very quickly turning into a buyer's market here.
A lot of houses lately where we're waiting for the auction day, and like a week before, there's no more auction. All of a sudden they're for sale again. And it's sort of like, okay, well, here we go again. We're waiting another 4 weeks, and constantly getting sort of dudded, to be honest with you.
So, sorry, is the auction getting postponed, or it's being withdrawn?
No, just withdrawn.
Withdrawn.
Yeah,
okay, well, that's the surest sign that there's a lack of interest in the property, and as a buyer, that represents an opportunity to go in and make a bid at the price that you're prepared to pay.
Yeah, that's it. Okay,
Good on you, Jack. Thank you very much for that. Except the problem is, as we've discussed, if you get a price that you think you may have been looking for at auction, and you get it offered to you, you can't say, oh, that's a good price, we should take... If we're getting that now, imagine what we're going to get at auction. You may not get anywhere near that at auction, because that person's still looking for a house and goes elsewhere. If
you get a pre-auction bid, Chris, what you need to say to yourself is, to get this price or better at the auction, I need another second or third bidder prepared to bid above this level. And if your real estate agent cannot give you the comfort that buyer competition exists on your property, you're better off accepting the pre-auction bid or withdrawing from the market and forget about selling. Okay, what about interstate? What happened during... Were interstate places like your Perths, your Adelaides, your Darwins and your Brisbanes, were they getting going the same direction as Melbourne and Sydney? And what are they doing now? The other city that really boomed during COVID was Brisbane, as we speculated it would about 18 months ago. Last year, the weakest markets were Adelaide, Perth and Darwin. And now, as we come into 2022, the strongest markets are Adelaide, Perth and Darwin. Really? Yes, Adelaide houses were up 3.4% last month. Perth was up 1.2% and Darwin was up 1.9%. Because they're coming off a lower base. So we're falling harder in Sydney than the rest of the country because we had a higher base, and vice versa for those other capital cities. So the property market in Sydney in particular
is pegged right now onto what happens with inflation and interest rates. And if we see them stabilise maybe the beginning of next year or the latter part of this year, you'll see the property market revitalised.
Indeed. At the moment, this is a sentiment-based downturn. If interest rates stay high when people need to refinance next year, the downturn will turn into a structural downturn, which I've got little doubt the RBA are aware of, and hopefully we are seeing some relief in the interest rates by this time next year.
Okay, great. Great information today, great information, and a good measurement of what's happening out there. Peter O'Malley, thank you very much for your time.
My pleasure, Chris.
Harris Partners Real Estate, that's where Peter O'Malley comes from. You can contact them very easily. Just search Harris Partners.